The Forex market is a vast and exciting ocean of opportunity. With trillions of dollars changing hands daily, it offers incredible potential for traders to profit. However, like any ocean, it's teeming with dangers, and navigating its waters requires knowledge, skill, and a well-defined strategy. Without a plan, traders can quickly find themselves lost, overwhelmed by the sheer volume of data and the constant fluctuations of the market. This is where the Forex Shark strategy comes in, providing a clear roadmap for identifying and capitalizing on profitable trades. Many novice traders fall prey to analysis paralysis. They're bombarded with indicators, charts, and conflicting opinions, leaving them unsure of when to enter or exit a trade. This indecision can be costly, leading to missed opportunities and worse, poor trading decisions. The Forex Shark strategy combats this by simplifying the trading process. It provides a clear set of rules and guidelines enabling traders to cut through the noise and focus on high-probability setups. The beauty of this strategy lies in its straightforward approach. It doesn't rely on complex algorithms or esoteric indicators. Instead, it utilizes readily available tools and concepts that are easy to understand and apply. By focusing on harmonic patterns, trend analysis, and income arrows, traders can develop a keen sense of market direction and timing, giving them the confidence to act decisively. In the following sections, we'll delve deeper into the Forex Shark strategy, breaking it down into manageable steps. We'll explore the core principles behind its success and provide practical examples to illustrate its application. Whether you're a novice trader seeking a reliable system or a seasoned veteran looking to enhance your profitability, the Forex Shark strategy offers a powerful framework for achieving your trading goals. The Forex Shark strategy is built upon the foundation of two powerful concepts: harmonic patterns and trend analysis. Harmonic patterns are geometric price formations that occur naturally within financial markets. These patterns, like the butterfly, Gartley, and bat, reveal recurring price movements, offering insights into potential reversals and continuations. By recognizing these patterns, traders can anticipate market direction and identify high-probability trading opportunities. Trend analysis complements harmonic patterns by providing context to price action. Understanding the prevailing trend is crucial for any successful trading strategy. The Forex Shark strategy utilizes simple yet effective trend lines and moving averages to determine the overall market direction. This information is essential for filtering trading signals, ensuring that entries align with the broader market momentum. The strategy primarily focuses on the 15-minute time frame, striking a balance between short-term noise and long-term trends. This time frame allows traders to capture intraday price swings while avoiding the whipsaws often associated with scalping strategies. By analyzing the market on a 15-minute chart, traders can identify emerging patterns and react swiftly to changing market conditions. A key element of the Forex Shark strategy is its emphasis on simplicity and clarity. It avoids overwhelming traders with an abundance of indicators. Instead, it relies on a select few, used in conjunction with harmonic patterns and trend analysis. This streamlined approach minimizes confusion and allows traders to make informed decisions based on a clear understanding of market dynamics. By combining the power of harmonic patterns, trend analysis, and a focused time frame, the Forex Shark strategy provides traders with a comprehensive yet accessible framework for navigating the Forex market. It empowers them to identify high-probability setups, enter trades with confidence, and manage risk effectively. Now that we understand the foundational elements of the Forex Shark strategy, let's explore how to identify potential trade setups. The process begins with scanning the market for harmonic patterns on the 15-minute time frame of your chosen currency pair. Remember, we're looking for specific geometric formations that suggest a potential reversal or continuation of the current price move. Once a potential harmonic pattern is identified, the next step is to confirm its validity using trend analysis. Is the pattern forming in the direction of the prevailing trend, or is it a counter-trend setup? Ideally, we want to see confluence between the harmonic pattern and the trend. For example, a bullish butterfly pattern forming within an uptrend would present a higher probability long entry than one forming in a downtrend. To determine the trend, draw trend lines connecting swing highs and swing lows on your chart. Additionally, incorporate a moving average, such as the 200-period moving average, to smooth out price action and provide a clearer picture of the overall trend direction. Remember, the goal is to trade in harmony with the market, not against it. As you scan through different currency pairs and timeframes, you'll likely encounter numerous harmonic patterns. However, it's crucial to remember that not all patterns are created equal. Focus on identifying patterns with clear formations and strong confluence with the prevailing trend. Avoid setups with weak price action, or those forming near significant support or resistance levels. By mastering the art of pattern recognition and trend analysis, you'll develop a keen eye for spotting high-probability trading opportunities. Remember, practice makes perfect. Spend time studying charts, identifying patterns, and analyzing past setups. The more you practice, the better you'll become at recognizing these setups in real time.